The history books will tell you that US forces moved into Caracas to restore democracy. They will tell you it was about regime change and about the oil. But while the world watched the fall of a government on CNN, the real battle was happening somewhere else entirely, on the blockchain. Rumors are swirling in intelligence circles that the United States didn't just inherit a country in chaos. They may have just stumbled upon the world's largest state-owned Bitcoin stash. We are talking about potentially 600,000 Bitcoin, $60 billion at today's prices. If this stash exists, and if the United States government gets the private keys, they don't just become a whale, they become the market. But here's the problem. Nobody knows if the keys even exist anymore. So today, we are going to dive into the mystery of Venezuela's Bitcoin. We are going to look at how a sanctioned regime could have secretly built a fortune in BTC. And we're going to answer the question on everyone's mind. What happens to your portfolio if the US government decides to dump or lock up 3% of the total Bitcoin supply? My name is Lewis, and let's find out. Before we begin though, you do need to know that I am not a financial advisor and nothing in this video is financial advice. It's educational content intended to help you navigate the geopolitical chess game being played with your digital assets. If that sounds good, then go ahead and punch that like button like it owes you money, and let's get into it. Venezuela has been the world's most fascinating and tragic crypto experiment for the last decade. Back in 2018, while the Bolivar was inflating by 1,000,000%, the Maduro regime launched the Petro. It was supposed to be the world's first oil-backed state cryptocurrency. Spoiler alert, it failed. It failed because it was centralized, it was censored, and frankly, nobody trusted the issuer. By 2024, the government had officially pulled the plug on the Petro. But while the public experiment failed, something else was happening in the shadows. See, necessity is the mother of adoption. And when you are cut off from the global banking system, when SWIFT is weaponized against you, you don't stop trading, you just stop using dollars. Venezuela became a crypto-fiscal nation out of sheer survival. But the question is, did they just use crypto to survive, or did they use it to accumulate? This brings us to the $60 billion question. Does Venezuela actually have 600,000 Bitcoin? The claim comes primarily from intelligence sources and investigative reports, most notably from the whale hunting newsletter by Bradley Hope. The theory goes like this. For years, the regime's inner circle has been converting state assets into Bitcoin. We aren't talking about buying on Coinbase though. We're talking about industrial-scale money laundering. Reports suggest that roughly $2 billion in gold from the Orinoco mining arc was sold and converted into Bitcoin when BTC's price was as low as $5,000. If you do the math, that tranche alone would be around 400,000 BTC. Add in years of oil sales settled in USDT and then swapped to Bitcoin, and the math starts to look plausible. But, and this is a massive but,
where's the proof?
If you look at the verified data, it tells a very different story. Official trackers like Bitcoin treasuries credit the Venezuelan government with holding just 240 Bitcoin. That's barely enough to buy a nice house in Miami, let alone run a country. Blockchain intelligence firms like Arkham have stated publicly that they have not identified a smoking gun wallet cluster holding 600,000 coins. So, are the intelligence agencies lying? Or is the regime just that good at hiding it? Well, to understand how they could hide $60 billion, you have to look at the mechanics of the shadow reserve. It starts with oil. By 2024, PDVSA, the state oil company, was reportedly collecting nearly 80% of its revenue in stablecoins like USDT to avoid US banking freezes. Tether actually froze over $180 million in USDT linked to these trades in early 2026. But stablecoins can be frozen. Bitcoin, however, cannot. So the logic dictates that you move from the freezable asset to the unfreezable asset as fast as possible. Then there is the mining. In May 2024, the Venezuelan government launched a massive crackdown on private Bitcoin mining. They seized over 11,000 ASIC machines. The official reason was to stabilize the power grid. But let's be honest, if you're a cash-strapped government and you seize 11,000 money printing machines, do you just turn them off? Or do you plug them in somewhere else and keep the private keys for yourself? This supposedly created what some analysts call a shadow reserve, a decentralized network of wallets, likely passed through mixers like Tornado Cash, held by proxies, and completely invisible to standard blockchain heuristics. It sounds like a movie plot. But whenever numbers this big get thrown around, and whenever the details are this murky, you have to ask yourself, how do you profit from this chaos? And if you're trading crypto in this kind of volatile environment, you need an edge. And that brings me to the Coin Bureau deals page. Look, whether the market is dumping because of a geopolitical crisis or pumping because of a supply shock, you need a reliable exchange that isn't going to trade against you. And you definitely don't want to be paying full price on fees. And that is where our deals page comes in. We have negotiated exclusive sign-up bonuses worth up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% with the best exchanges in the industry. Just hit the link in the description or scan this QR code right over here. It will take you straight to the deals page, and that's where you'll find all of the offers that fit your strategy. Now, these deals won't be around forever though, and in a market moving this fast, every basis point counts. So scan the code, grab the bonus, and let's get back to the $60 billion question. So let's assume that there are 600,000 Bitcoins sitting on hard drives in a bunker in Caracas. Can US forces actually get their hands on them? This is the ultimate stress test for the mantra, not your keys, not your coins. Physical seizures are easy. You could take the bunker, you could take the laptop, you could take the hardware wallet. But unless you have the password or the seed phrase, the hardware is just an expensive paperweight. We actually saw this with the fishing rod case in Ireland, where a guy hid the keys to millions of dollars worth of crypto in a fishing rod that got thrown away. The government has the device, the money is gone. In Venezuela's case, the keys are likely held by a network of loyalists, or perhaps by intermediaries like the infamous Alex Saab, who was a key financial architect for the regime. If those keys are lost, or if the holders refuse to talk, those coins are likely gone forever, and the US government knows this. SEC Chair Paul Atkins recently admitted in an interview that seizing this stash is, quote, uncertain. He explicitly said, quote, I leave that to others in the administration. That is bureaucratic speak for, we have no idea how to crack this. But let's play devil's advocate. Let's say the NSA, the CIA, and the DOJ work their magic. Let's say they crack the wallets or cut a deal with a key holder. Well, what happens then? Right now, as of early 2026, the United States government holds approximately 325,000 Bitcoin. This number surged recently after a record-breaking seizure of 127,000 BTC in the Shen Z case back in October of 2025. If the US seizes another 600,000 BTC, their total holdings would jump to nearly 1 million Bitcoin. That puts the United States government on par with Satoshi Nakamoto. They would control roughly 5% of the total circulating supply. In previous cycles, the US Marshals would just auction this off. Many remember the Silk Road auctions where Tim Draper bought thousands of coins for pennies on the dollar. But the policy has since changed. In March 2025, the Strategic Bitcoin Reserve was established by executive order. The policy is now seize and hold. Treasury Secretary Scott Bessent has confirmed that seized assets are no longer to be liquidated. So, if the US gets these coins, they aren't hitting the market. They are going into a vault, likely forever. This creates a supply shock that is hard to comprehend. We are talking about removing 3% of the liquid supply from the market overnight. In a world where ETFs and corporate treasuries are fighting for scraps, locking up 600,000 coins is rocket fuel for the price. But there is a darker side to this coin. Geopolitically, this changes everything. The BRICS nations, Brazil, Russia, India, China, South Africa, are already looking at crypto as a way to bypass the dollar. Russia is set to legalize crypto payments fully by July of this year. If the US government suddenly becomes the largest Bitcoin whale in existence, how does that look to them? It looks like digital hegemony. It looks like the US is trying to corner the market on the one asset that was supposed to be neutral. And it raises a fundamental question about the nature of Bitcoin itself. Bitcoin was designed to be censorship resistant. It was designed to be unseizable money for enemies and friends alike. If the US can extract the private keys to a sovereign nation's treasury, is Bitcoin really sovereign-grade protection? Or is it just a bearer asset that is only as secure as the person holding the wrench? And there's also a humanitarian angle here that nobody is talking about. These funds, if they exist, were built on the back of a nation's collapse. They represent the oil wealth of the Venezuelan people. If the US seizes them and puts them in a strategic reserve to back the dollar, is that justice, or is it modern-day piracy? There are precedents, like the UN Convention Against Corruption, for returning stolen assets. But asset recovery is messy, slow, and political. Just ask the people of Nigeria who waited decades for the Abacha loot to be returned. So, where does this leave us? We are staring at a binary outcome. Scenario A, the keys are lost. The 600,000 BTC are effectively burned, the supply of Bitcoin shrinks permanently, and the scarcity narrative goes into overdrive. Then there's scenario B. The US gets the keys. They become the undisputed kingpin of the crypto market, holding a bag so big that they can dictate policy just by threatening to sell. Either way, the era of Bitcoin being a niche internet currency is over. It is now a matter of national security. And let's be honest, if you are holding Bitcoin right now, you aren't just an investor anymore. You are a spectator in the highest stakes poker game in history. Now though, I want to know what you think. Do you believe the 600,000 BTC stash is real, or is it just an intelligence psyop? And if the US gets a hold of the keys, should they hodl them or give them back to the Venezuelan people? Let me know your comments down below. And if you want to understand more about how the BRICS nations are planning to use gold and crypto to fight the dollar, well, you can check that video out right over here. Thank you all so much for watching, and I'll see you again very soon. This is Lewis, signing off.